So things are going to really kick in on the lending space for a lot of people. I'd rather hold till next week to make any formal announcements. Some speaking engagements that I'm going to be at this week. I'll be speaking tomorrow night at South Jersey Investors. I'll be also speaking and presenting on investor trends and markets in New York at the New York Real Estate Expo. If anybody would like a free pass, please directly text me or email me off of here on Clubhouse, where I can formally get you an invitation. If you text me to my number, it's on my website, and I will get you a complimentary invitation to the New York Real Estate Expo, and I'll be speaking there as well. Again, we're getting really close to the white label course coming up November 15th here in Philadelphia, full day workshop for people to take their business to the next level. We're capping at 35 people, which I think we're getting really, really close to what that is. So I'm pretty excited about that. Let's talk about the market today, of course, or the week, for the week at least. Rates closed out on the base rate of conventional rates around 6.19 on the conventional side. Commercial lending, DSCR 1 through 4 and 5 through 20, the coupon rate has lowered down to 5.75. And bridge money, meaning fixed to rent, fixed to flip, officially is down to 8.75. So you're seeing a lot of numbers working in the favor of the investor. I know we're seeing increased home sales in this quarter four. We also are seeing a higher inventory, but what we are seeing is a heavier investor buying market. So this discussion today with Fred will tie in a lot of our discussion together and how you build that wealth together, working as an investor agent type of environment. And then I'll tie in lending as well to that. Inflation came in pretty good. It hit about 3% in September, lower than expected. We're still waiting on some CPI reports to kind of show what else is coming. The Fed's looming in November to talk about another rate shift. I think we're already seeing that baked into the rates already. I mean, 6.19 is really a strong spot right now for conventional, and 5.75 is a really strong spot for commercial. Cost of living adjustments increased about 2.8. Not a big move. Obviously, the market is slowly, the conditions are softening. We'll see how that goes into quarter one and quarter two. I talked to a top former president of the National Association of Realtors yesterday. I mean, like, he's at the top. And he feels we're going to have a really good spring market. I'm like, it's going to be hard to say, depending on how the Fed moves in March, with Powell making some moves there, getting out, and Trump replacing him with somebody. We'll see what that does. I feel like we still are at least a couple quarters away of a normalcy to the home buying space. But I'm seeing also apartment market conditions softening as well. I'm seeing a lot more multifamily offering higher complementary months to get into a deal. So the competition is extremely heavy in that B plus rental market. Affordable housing is doing quite well, steady, but it's not as what it once was. There's a lot more details to the Section 8 space. Some market trends that I've seen this past week. I think homeowners they're gonna get in reality. Rates are a little higher, in getting into a property. Even though, because affordability and the price point of buying a property right now, I think we're going to have some issues going quarter one, quarter two in affordable homes, affordable rentals. I think there's going to be a tightening there with so much B neighborhood, multi rentals available. Some other articles that caught my eye this week. Inventory hits a 5-year high, but home sales are rebounding. So again, very, very interesting dynamic there. And equity is almost at its highest in homes, in properties, than ever before. So a lot of the investors are repositioning their DSCR and scaling right now. I have a lot. I officially have over 85 new loan submissions in the last 48 hours. We're going to hit almost, by the end of today, I'll have 100 submissions within the last 72 hours. Between DSCR and fixed to rent and fixed to flip. Very aggressive market right now going to the end of the fourth quarter. Very exciting market if you're in the lending space on my side. So let's get into this discussion, and we'll get it will introduce Fred. I mean, I met Fred through Linda Pelagas, who is one of our sponsors. Also want to recognize our other sponsors, Mr. Yurdal Perkins of Perkatech. I'd like to thank MB Capital Solutions with Eric Moss. I'd like to thank TCS Property Solutions and Realty Solutions, where my real estate licenses are held, where I hold neighboring events at their locations in New Jersey and Pennsylvania. And I want to thank Real Estate Mastermind Strategies. We now have events in Pennsylvania, New Jersey, Connecticut, Delaware, Maryland, New York. Very excited about the growth of that platform. But Zoomcasa is this online service bridging the gap as a concierge platform for home sellers. The company was founded by Fred in 2018. It's headquartered in Woodland Hills, California. And his model is, they'll buy the homeowner's property or provide an offer enabling the homeowner to unlock the equity or buy the next home before selling their current one, which is a great concept. And there's some great models and processes that are in place where they facilitate this. And I think this is a great discussion to have because it might interest you as an investor-friendly real estate professional because of the midterm rental investor focus, and then also the lending and underwriting that's put into this as well, which I'll probably hit Fred up with a couple questions in regards to that. So, Fred, good morning and welcome. I know it's a little early for you out on the West Coast. Are you all good there?
Yeah, good morning. Good morning. Thanks for having me on.
Yeah, so I'm really excited to have you on here. I know we kind of had a little confusion on getting you on here, and you finally found the text. I'm glad you're here this morning. But why don't you give a little outline of who you are, what you do, and what is your why? And then obviously we put some questions together on this discussion, and then I'm going to ask you some questions in regards from the lending perspective, and then we'll get the moderators that tie in as well. Go right ahead, Fred.
Sure. Well, it's a pleasure to be here. My name's Fred Bin, based in California. I started Zoomcasa about 8 years ago. My background is as a more traditional investor, and to flip houses, flip apartment buildings, commercial properties. And the genesis of Zoomcasa was creating a solution for sellers that allow them to participate in the flip. So our business model is a little different than a traditional investor in that we purchase properties of all conditions. Some of the homes we buy are turnkey, others need substantial renovations. But what's unique is we allow the seller to participate in the value creation through strategic improvements. So basically, when we buy a home, we get an appraisal of that home, a third-party physical appraisal. And we'll give the homeowner somewhere between 60 and 80% of that value initially. We buy the home. So we purchase it. There's no mortgage. We just pay. We pay cash. And then we'll renovate the home. And then once we're done renovating it, we list it for sale and we sell it. When we resell it, there's a waterfall. We pay traditional closing costs and commissions. We get reimbursed the capital that we provided the homeowner initially, plus any money we spent on renovations and any money that we spent on carrying costs like utilities. And we take somewhere between 5 and 10%, and an initial seller gets a second check. Basically, that initial seller is getting somewhere directionally around 90% of what they would have gotten had they sold traditionally, but they get to benefit from a quick cash sale and avoid living through showings or home preparation or renovations. So it's a mathematically for a seller that doesn't want to deal with the traditional sale process is a solution to net them the most amount of money possible, because certainly they're going to net more than they would selling to a traditional investor. I mean, no investor is going to pay them 90% of ARV. And the product resonates. So that's our core business. We operate nationally. We have a significant presence in around 30 states. We do a few hundred transactions a month.
So, Fred, I've heard of this and I've seen this transact with a couple of real estate offices, and I've seen some succeed and I've seen some fail. The real estate companies offering the same relevant product. What separates you from some of those companies that have made those attempts in offering this product to the client, right? To getting rid of their property. And I don't want to give names to the other companies. I know we probably know the same names, but I'd rather not drop those names. I'd rather just say like the competition out there within the real estate industry itself with companies that are offering this. What separates you at Zoomcasa in regards to everyone else right now today?
I'm not aware of any company that has the exact same product that we do. It's a little bit, the product itself is unique. But there's certainly other investor or cash offer programs in the marketplace. I think where we've tried to set ourselves apart and avoid some of the pitfalls is, number one, we have an extremely expensive buy box. So a lot of these, iBuyer or cash offer programs, the value proposition is obvious, right? But if 95% of properties don't qualify, then it's just a recipe for disappointment and people get pissed off. So our buy box is very expensive. It's like $300,000 to $5 million, various conditions, all 50 states. We buy condos. And I think that really helps get deals done. And our model is unique in that we don't have a direct consumer business model. We exclusively partner with agents and lenders, and we embrace the full service brokerage and full service lending model. And it creates a win-win outcome. And I think it gets folks to really promote and embrace our solution and bring it to their clients.
So I got a couple of questions that we put together for you. Big picture, where does this connect with agents and investors today? And in your experience, what is the biggest misconception each side has about the other? And how has the market in 25 changed the way agents and investors approach collaboration?
So I think that, let's be honest, we compete with traditional investors. And for a seller, we're probably net after both transactions going to offer a seller more money than a traditional investor would. But I think a lot of smart investors and agents look at us as a solution in their toolbox. So we do a ton of work with just traditional investors and also agents that deal with a lot of like investor offers, and that they will offer us as a solution for homes that I call a tweener. So for a turnkey property where the seller wants a cash offer, but they're not willing to take a substantial discount, it doesn't make sense. Or maybe a home that is a cosmetic fixer and just needs some TLC, and it's not a major rehab project, and there's not a ton of value add. We are a solution that if you work with us, it's a difference between getting a deal done and getting paid on it versus just having to pass. So we did a deal last week in California where the home is like 15 years old. It's clean. It's a higher price point property. It's like $2.5 million. And the seller wants a quick cash offer and doesn't want to deal with a traditional sale. And it doesn't really need any work, maybe a coat of paint, staging. And the cash offers they were getting were like 1.7, 1.8, which like 85 cents on the dollar. It's not bad. But the seller's like, I'm not walking away from $700,000-800,000 of equity. Are you crazy? So the investor who in the cash offer instead acted as a broker and brought in our offer. And that seller net is going to walk out with somewhere, instead of giving up $700,000 or $800,000 selling to a traditional investor, they're going to give up like, I don't know, 150, maybe 175 using our program. And they were okay with that. And that agent now is going to list that home for sale, get paid on as a listing agent, and also make something for referring that business to us. So again, I think as an investor, as an agent in this space, this is a program that it doesn't compete with you directly and allows you to offer uh, a solution to a much broader segment of the market, especially those homes that we call tweeners.
Yeah. So position, for the agents, for the real estate agents, how are we positioning as investor allies? Like, how are we positioning the realtor in this space to really see the light and benefits for them? Because at the bottom line, they need to make commission, they need to make a living, and in some of these markets that are softening, California, maybe in certain areas, Florida, the Northeast area, certain areas are softening. How would this help those realtors, or even the Midwest? Listen, any market that is softening a little bit, how will this impact the agent position themselves as investor allies?
As an agent today, if you are not offering sellers an option where they can avoid the brain damage and pain of a traditional listing process, you are failing your customer and you won't be in business long. So I think, and most people on this call would agree, that as an agent, you need to present solutions to sellers that solve their problems. And a lot of agents get into this routine where they parrot various Tom Ferrier equivalent scripts, and they forget that their job is to be a solution provider and not be a parrot for scripts. And we are a really important solution that's in your toolbox. I think every seller should be presented with options. You can list your home traditionally. This is what it looks like. If you want to avoid that process, here's a solution to do so. If you want just another cash offer, here's an investor offer, which is not Zoomcasa. And let's figure out what's the best solution for you and go from there. And we see agents that embrace these alternative options expand their book of business, be a lot more competitive, and make a lot more money because they're differentiated and they're solving their clients' problems. So, what's unique about Zoomcasa is we don't compete with you in any way. We're an ally in that we're not seeking to take your brokerage commission. We're not seeking to be a lender. Our goal is to cooperate with brokers and lenders and deliver a really powerful solution that helps consumers.
My next question leads into the investors. How are they leveraging the agent relationship in this scenario? The real estate investors, the investor perspective.
I think smart investors understand the value that agents bring to the table. I always scratch my head when I see investors try to take an ounce of flesh from an agent or a broker. It's like that their relationship with the client is sacred. Again, I think a lot of smart investors, smart agents, they're using us as a solution to expand what they can offer consumers. So, maybe you hit a seller with a traditional cash offer, then that doesn't fly. You say, well, that may not work for you given your circumstance, but maybe you want to consider Zoomcasa. And it's better to close a deal and earn something than just have your offer rejected. So that's where we can come in and play with you.
So the collaboration in action, deal and strategy, can you share me like an example where a strong agent investor partnership directly led to a multiple successful deal or deals? Like a scenario that maybe comes to mind, in that.
A lot of the agents that we work with, and there's a kind of a learning curve as an agent when you're exposed to the kind of investor option, investor solutions, and the light can go off. And we see that happen pretty frequently. The guy in California has actually become a personal friend of mine. He's a really successful agent today, doing north of $1 million at UCI a year. And got his license around 8 years ago. And his background, he ran a carpet cleaning business. He's actually still owns the carpet cleaning business. And he was a struggling agent. He took all the training, he did all the traditional agent onboarding, and he went through the whole Keller Williams model, which I think is great. but he struggled to win business. And he's in Southern California, which is a pretty competitive market. And he met us through his brokerage, and it took him a few months to kind of understand our products and services. And once it kind of set in, he oriented his whole business around being the agent that has alternative ways to sell your home and help you maximize your proceeds. And he went from doing maybe one or two transactions a year and barely scraping by and thinking about giving up his license. Today, he's doing 20 plus transactions a year. And these are higher end properties that need a bunch of work. So his niche is helping sellers who have typically either inherited a property or just lived there a long time figure out how to reposition their asset and maximize their proceeds. And he's just killing it. And in a market where there's a lot of commission compression and a lot of competition, he actually charges a 7% commission. And that includes the buy side commission to list your home for sale. So he's keeping 5 and giving the buy side 2. And these are typically, $1 to $3 million homes. And the sellers are happy to pay that because they recognize the value that he's bringing to the table. And I'm going to give you an example. One of the last transactions he did with us, there's a lady who inherited a house and it's a mess. There are vagrants living in it. It's like cracked in. It was terrible. But it's a really good area. And she was going to sell it. And the best investor offer she got was like $650. And she was going to accept that. And instead, he brought us in. We paid her $500 up front. We put $115,000 into the house, and it sold for $1.010 million. So directionally, it sold for around $400,000 more and put in, about $115,000 to get there. So net, she netted around $900,000, $900,000, which is a couple $100,000 more than the cash offer she received. And that seller has become an evangelist for this agent, telling everyone she knows how fantastic that outcome was. And he's built a whole business around it. So I think that's a good example of how agents can embrace our product and really use us as a partner to become a solution provider.
Yeah, I have 2 more questions that are going to tie, and then we're going to open it up to the moderators to obviously, probably poke some questions at you or discuss statements. One question here, prop tech in the future, Zoom Casa's role. How do you see technology and Zoom Casa on reshaping this agent investor dynamic?
Figuring out AI. I think prop tech is more about new and differentiated solutions and services versus removing people from the equation. And we are constantly seeking to create new services that help solve homeowners' problems. So, and one of the things that Zoom Casa we pride ourselves on is nothing here is static. We're constantly learning and adapting and trying to continue to offer the best solutions in the marketplace for consumers.
And my closing takeaway, and then we'll open it up to our moderators to obviously ask questions and then to get some interaction here. If you can give one piece of advice to any agent right now that's listening, and we have a lot of viewership as a follow-up to this podcast, to the agent who wants to start working with investors tomorrow, what would be the biggest advice you would be to give to that real estate agent that wants to work with investors tomorrow? What would it be?
A lot of agents who say they want to work with investors, and they start this process of networking with investors and attending podcasts and reading blogs and being active. And that's great. I think education is really important. At the end of the day, as an agent, the biggest asset you have for an investor or any investor is sourcing potential leads and potential property acquisitions. And that means doing the hard work, which is cold calling, mailing, door knocking, and finding properties for folks to buy. I think a lot of agents forget that process. You need to focus less on networking with investors and more on networking with sellers and finding actual acquisition opportunities. And that's the hard work, but that's how you get paid, and that's how you deliver value. And part of that is embracing solutions that are different from just the conventional investor options. Like, certainly you need to have some traditional cash offer solutions. You need to have some more interesting financial solutions, whether it's lending products or other products that are in that like that. But you also need products like Zoomcasa, where you can offer seller options when they want to sell their home that are different than just a traditional cash offer.
And finally, before we open up to the moderators, one sentence I want to give to you. What does building wealth together instead of competing mean to you? Building wealth together instead of competing mean to you?
It means less fixation on potential competition and more focus on expanding the pie for everybody and just delivering solutions for sellers. I think we spend so much time following what other companies are doing, what rates are, what terms are. We just take a step back and focus on how do we help sellers solve their problems. There's a lot of money to be made.
Yeah, I agree with you. And we're going to open it up to our moderators and get their introductions and hopefully some interaction with you, Fred, as well. We'll go with, obviously, ladies first, the rose amongst the thorns. Amy, good morning and welcome. Brief overview who you are, what you do, and thoughts to our discussion with Fred Bin at Zoomcasa this morning.
Joe, thanks for having me in the room, and welcome, Fred. I am Amy Palvido. I am the chairwoman of the U.S. PropTech Council. We are the trade association for the real estate technology industry in the United States. I'm also a real estate developer. I've been for a very long time. I started real estate investing back in 2008 and have been in real estate since 2003.
We know that, but I thought this was a good segue for some discussion with Fred.
Here, yeah, I mean, there needs to be, Fred's doing a really cool thing in the fact that obviously at the end of the day, he's mitigating risk for sellers, and he's taking that risk on. And there's always value when you take on risk for anybody in a scenario, whether you are an early developer and you mitigate risk for the developers behind you, like you're a land broker or a land banker, and you do horizontal development, that mitigates risk for somebody. There's always value in that part of the chain, and that's what he's doing, which is super awesome. I would, and I think, I'm obviously the technology woman, so I would, for Fred, are market stalling. Does that become more of a boon to your business, or does it change anything to you as the market falls a little bit, or what do you see?
That's a great question. So, certainly a slower market makes an investor offer more appealing to a seller. I think everyone's business was a lot harder in 21 when sellers were correct that if they just put their home on the market, it would sell immediately. So it's helpful, but it also means that we have to be more prudent with risk and understanding that it's going to take homes and more transparent with sellers, making sure that they understand that their home may sell at a discount. There's certain markets that are really impaired right now.
Yeah, for sure. I think it's obviously it's an interesting time, and real estate's always location specific. So it just it is what it is. So as you expanded into other states, what challenges did you kind of face? Are you building up a network of? I mean, how did you do that? That's always a curious thing.
In terms of like contractors and service providers?
Yes, for sure.
So we have a whole team that sources and manages vendor relationships. It's the most challenging part of our business. We almost exclusively work with local vendors, so we try to find the best local folks to work with us. Our thing of operations used to run IKEA's fulfillment business. So if you bought a kitchen from IKEA, the challenges that they face is anywhere in the country, they'll install it for you. Ensuring that that's a positive experience, you can only imagine the operational complexities. So he's our COO, and he's kind of been through that rodeo. So it's a challenge. We have a very large team and a lot of folks that are dedicated to figuring that out on a daily basis.
Yeah, when I was a general contractor, we were operating in 16 states, and it's a daily. I mean, even in your local area, it can be challenging. Much less add the complexity of being in, not just 16 states, but in like 30 markets, right? It's insane. But it's always. I think and for folks like you, the solutions that you're providing, you're probably like building more technology just for yourself to manage your daily complexities than the customers are even seeing. Correct?
It's interesting. I think most of our customers never even interact with our tech stack. They want to talk to somebody. They want a warm person. They want to text. They want to jump on a call. But we've built our own project management services, and the challenge is there's just not a lot of products out there that are the software products or the tech products that are built for this particular business model. I mean,
right.
If you're a contractor that's doing new builds, there's plenty of services out there. But if you're managing a diversified portfolio of flips, not a good solution out there that I have.
No, there's not. Yeah, it was the same. It was the same when we were there. So it changed. But that's that's how I became a PropTech founder, is because I couldn't see anything, and so therefore I made it. It was kind of. But I think there needs to be more of that. When you're in it every day, you're the perfect person to kind of identify the pain points and what the solution needs to be. So there's my, if you want another hat to wear, Fred, like I do, maybe you're not crazy like me, but if you want to wear another hat, create a solution.
Amy, I sense a conversation on your one of your upcoming LinkedIn podcasts with Fred. I sense that happening somewhere down the road.
To have you.
Yeah.
Yes, for sure.
Absolutely.
That's great.
So, Fred, thanks for interacting with Amy. We'll go to Steve. Good morning and welcome. Brief overview who you are, what you do, and thoughts to our discussion with Fred Bin and Zoomkasa, Agent Investor Strategy, Building Wealth Together.
Hey, Joe. Yeah, nice to meet you, Fred. Very curious before I get into the other half. And by the way, I run REI Homepage. I do a bunch of things. I'm a broker, a buyer. Hoping to finally get a signed contract on a self-storage facility this weekend. That would be fun. Got a competitive LOI out there, we hope. Anyway, first question is, where do you get your cash stack? Like, do you secure private investors, or how do you sort of get the other half of your game going?
We fund our business through Wall Street with house lines of credit.
Okay, all right, okay. Because as an individual investor, I'm always looking for places to do stuff. I think it's a phenomenal idea. I think that it's something that I've toyed with on the local level. Like Joe mentioned, there are people who locally do that. They say, "Hey, here's how we can involve the seller, on the backside." But I think you're able to work at a higher scale. Like we would never do $300,000 deals, partially because they're just not out here. And I think that adding, when I put on my broker hat, adding any other tool to the box that says, okay, well, you don't want a wholesale offer, you don't want a listing offer, here's another option, here's a third option. I think that's wonderful. I really do. And I can't wait to see where you're growing, especially as things get more competitive. And some sellers are starting to realize the glory days of 21 are over, so they have to get a little more creative. They don't want to give up their money. I'm still finding that they don't want to give up their retail money, but they can't always get it from the local flipper investor like me. So I think yours is a great middle model. I'd be curious to know if you've ever seen anyone try it at the lower price point. Like, in the market, the dipped in gold 3 or 4 bedrooms in the low 200s when it's done. Have you ever done the math to say, oh, gee, it can't possibly work down that low because of something? Or is it simply you started in California, so that's the price point you're thinking in?
At this point, one of the challenges with lower price point homes is the cost of kitchen cabinets or cost of appliances. Those are kind of fixed costs. Yeah. So if you got to redo a kitchen or a bathroom, like, it's just tough to see a positive return on investment. Having said that, you can certainly make money. Now, as a business person, if our economics are a percentage of what it sells for, it's the same difficulty to do a $200,000 house as it is to do a $2 million house. You just make a lot more money in one versus the other. We try to offer solutions for everybody.
Yeah, okay. And truly, that's why I'm doing a lot of self-storage and bigger projects, because it is very hard. If you're selling something for $200,000 and you make 10%, well, guess what? Life goes on. So, Joe, that's pretty much what I have on this one, I think. Appreciate the opportunity, and definitely want to keep listening.
Thanks, Steve. Good morning, Felix. Welcome. Brief overview of who you are, what you do, thoughts to our discussion with Fred Bin at Zoomcasa in regards to agent investor strategy, building wealth together.
Felix Buchanan Sr., Buchanan Biz Enterprises, the JLix Group, and I'm a team leader for Keller Williams Legacy Team in Maryland. I mean, Amy and Stephen really asked majority of the questions that I would ask, in the sense of the price point, being lower. Like here in Maryland, it can be anywhere from 200, maybe even 600,000. I definitely see value in it because there's an investor that I know that does a lot of stuff in Cumberland, and she used a company similar to what you guys offer. They would buy it and then they would put the work into it and then be able to put it back on the market. That's the only difference. They didn't directly still deal with the seller.
Yeah, I mean, that's kind of what is unique about our business model. There's plenty of investors that'll just buy a home and flip it, but many of them will share 90+% of the profit with the seller.
Because then in that you give in more. But from a real estate standpoint, obviously agents are going to be more thrilled with that, because then that's more commission that comes their way in a deal of that magnitude.
I think they just get more deals. I mean, think about it. It's a lot easier to get a seller on board and to accept an offer where they're going to get 90% of whatever it ultimately sells for, versus, I don't know, you tell me what a traditional investor would pay, maybe 70 cents on the dollar. It's just a much easier pitch.
Absolutely. Yeah, I definitely think it's a good idea. Yeah, that was it for me. I didn't have much. Like I said, Amy and Stephen asked pretty much the questions that I would ask along with what I just did. I think it's a good idea, though. Good business model. Mm-hmm.
Thanks, Felix. Thanks, Fred, for the input on there. We'll go to Melissa. Good morning. Long time no see. Brief overview, who you are, what you do, what's your why, and any questions in regards with Fred on agent investor strategy, building wealth together.
Yeah. Good morning, Joe. Thank you for having me up. It's been a couple of weeks. I am Melissa King, the founder of Busy Bee Virtual Solutions and soon to be CareBee Virtual Fiduciaries. So, Fred, it's extremely interesting, this conversation. I was listening a little bit before I got on. We can't really go into the the conservative national. I got a line from the gentleman that says he can see us. This is the mandate. I feel that's a fantastic over business. model comes into play. How do we view these seniors? Because as we head into the silver wave,
Right. I got some questions to kind of lead back to our discussion. Thank you, Melissa, as always. As a direct private lender in the non-QM space, where do you see people like myself, professionals like myself, playing that bridge role in the agent investor synergy model by turning the financing into a collaboration engine rather than a transactional bottleneck? Love to get your thoughts on where you see this as the lender being the connector, educating agents, empowering investors, creating this shared ecosystem. What's your thoughts on that? How do you think that could tie back to Zoomkasa?
Well, I think as a lender, you can be, your job is to deliver value to your clients, and that is informing them of solutions in the marketplace that help solve their problems. And for some clients, Zoomkasa might be one of the solutions. And we work with a lot of lenders nationally. And maybe you have a client that is trying to buy before they sell. Maybe you have other needs, and they may not fit in the traditional lender box, and we help do that. So, again, it's all about being a solution provider.
And I have a question from the audience from Cindy in Salt Lake City. Are you in that market, and what's your thoughts on that market where it ties back into Zoomkasa at this point right now in the market?
In Salt Lake, surrounding areas, we look at the market. We think it's a strong market. It's a durable market. It's proven to be quite resilient. If you have any particular questions, I'm happy to answer them.
Yeah, let me see if Cindy has any other additional questions. Cindy, if you have any additional questions, I'm going to lead also in regards to, I have Deborah out of Las Vegas. With Vegas softening a little bit, where do you see Zoomkasa seeing opportunities? Is it's still in that luxury estate type of homes in the Vegas surrounding areas, the burbs? Are you seeing opportunity within Vegas? What's some thoughts on that? Because that is a softening market right now.
Yeah, we're actually quite active in Vegas right now. Vegas is probably in the sixes, I want to say, which is, definitely considered luxury out there. But again, softness, I think, increases demand for non-traditional solutions, because those are sellers who are going to have a tougher time selling their properties. But again, there's not a ton of new supply, and if you're in the right neighborhoods, it makes a lot of sense. And we've had a lot of success out there. We really like it.
Excellent. So,
Hey, Joe.
Go ahead. Yeah, go ahead, please, Amy.
So, Fred, have you explored using any of the new VR technologies, especially since you're proposing the remodel as part of your service to them? Have you explored using the VR that show a seller basically what the remodel would look like? Any of that yet?
Yeah, so that's a great question. We do renderings for sellers, like mood boards, and a lot of that is to help them visualize what the renovation could look like. Again, most of what we're doing is like cosmetic stuff. It's not models, but it's really helpful for a seller to be able to see what they're going to get in the final product. And that's particularly true in kitchens or bathrooms or even the exterior paint jobs.
Oh, but have you seen the VR stuff that can actually just put that, you can walk around and see what it would turn into?
An AI app where you can put your phone, but it's always open to new stuff. If you have anything you suggest, have to look at it.
I'll send it your way for sure.
So for a little color to Amy, she is the the founder of the Prop Tech Council. She has some great discussions with people in that industry, almost a weekly, right? At this point, Amy, right?
Yeah.
Are you going to be at the New York Real Estate Expo on Tuesday?
No, to be at a different conference. I swear I'm a conference junkie, but I'll be back in New York. Well, I'll be in DC and then in New York. They'll do this in November. I'll be up your way again.
Sounds good.
To get to that.
So, Fred, some of the questions I have, and just listening to this conversation through, I mean, Philadelphia and Baltimore, which are kind of my theraways, and then up to New York, but Philadelphia and Baltimore are taking a massive hit in value decompression. And we're talking like 10 to 15%, right? So your burbs are going to obviously highlight a lot better for people to, one, the numbers make sense on the back end value, and hopefully solidify any slumping markets in the suburbs and those areas. Are you seeing that you're getting more inquiries in urban settings that are depreciating right now that they can't unload their inventory? Or are you still focused? Are you seeing as much on the suburbs as the urban settings? That's a concern I have right now.
I'm seeing it kind of across the board. I wouldn't say there's big influx one or the other, but I think everyone today is dealing with the uncertainty of when will my home sell, and they know it's not going to be quick, especially this time of year.
Yeah, I mean, right now, I don't see home buying at a top situation. Even if the rates come down another quarter point or so, we're at 6.19 base. I don't see that motivating anybody to buy a property during Thanksgiving and Christmas to move into, or any of the Jewish holidays as well. So I see it really as an investor play. Now, do you hold these properties short-term, long-term when you take these deals down? Like, how are you? What are you doing once you get somebody that's interested? You close the deal. What are you doing with that property right now? With the realtor or the what are you doing at that point?
Yeah, the goal is to turn it as quickly as possible. So we renovate it, list it, we sell it. On average, we homes for like 5 months. And a lot of them are, half of them are a lot quicker than that, and half for 8-9 months.
So, are you getting stuck with any properties? That might be the question of the day. Are you having to look at the long-term play with any of the properties if they don't sell accordingly to your plan?
You always have some stinkers, but we have some assets that take longer to sell and sell for less than we thought they'd sell for. But it's just part of the game.
You're buying with enough equity in the deal at closing where you can sustain that, even if it takes 9 months to flip. You're still making a little piece on the pie. There is what you're saying.
Hard, right? So you do enough of these, you'll have some issues, and we have issues. Some of the properties have issues. That's just part of the business.
Yeah. So some final thoughts from our moderators that are still here with us. I'd like to go with Melissa first. Any final statements or thoughts with Fred at Zoomcasa in regards to Asian investor strategy, building wealth together? Melissa? Melissa going once? Melissa going twice. We'll go back to Felix. Felix, any final thoughts in regards to our discussion with Fred this morning at Zoomcasa?
No, you guys covered everything. I thought it was great. Definitely think it's a great idea, for sellers. And thank you for coming.
Thank you.
Amy, the mouth of the West.
Yes, for sure. So as you move forward in your business, do you plan on adding any other services? What do you think? What's the next steps for Zoomcasa?
Yeah, I think over time we'll add services. We just added a buy before you sell, like backup offer option. So we're always trying to see how we can add value, and if there's a place to introduce your services, we'll absolutely do that.
Great, Amy. Thank you for that extra half a nickel.
You're welcome.
Well, Fred, how do we reach out to you if any of the agents? Obviously, once this is right now live on LinkedIn, Facebook, YouTube, then it loads to Buzzsprout, goes to Audible, Spotify, all the other special spots. What's a great way to get in touch with you if they want to grab a one-on-one with you or your team and collaborating in this type of discussion we just had this morning?
You should visit us at zoomcasa.com. We have a whole team of account executives who would be happy to help you and be assigned to you and help you close deals.
Right. I appreciate it, Fred. We're going to do some wrap up on this discussion today. I want to thank you for stopping by here in Clubhouse, in the Creative Birth Strategies house. And then this is obviously linked to the Creative Birth Strategies podcast, where we just celebrated our 150th episode. We're very excited about having you here. And I want to thank Linda Pelagas for making this happen. She obviously made a great introduction with you. And then we had a great introduction a couple of weeks ago with Pad Split on the West Coast as well. We really appreciate you being in our Creative Birth Strategy world right now at this point, and we'll market this out for you, and we'll get you a copy of this podcast sometime in the next couple of days once it's edited by Yordell Perkins of Perkatech.
Thank you so much, guys. It's a pleasure being here. Have a great day.
Fred, be well. Thank you. So some wrap up to the discussion today. I don't think there's ever a more important time for the agent and investor to collaborate. I remember during COVID or prior to COVID, agents venting about real estate investors. And that's if I just took a clip of that picture of that agent with that post, and then 8 years later, they're literally rubbing baby oil on the real estate investor's back to get business. It's like, what the heck happened here? Like, is that the same person? And I have more agents inquiring to understand non-QM space and direct private lending than ever before. I've had, in the last 24 hours, 6 phone calls from real estate agents that say, listen, I want to lend money. How do I do this? How do I offer this to my clients and be direct? I mean, it's happening. It's not going to happen. It's happening today, right now. I'm telling you for a fact, by Monday morning, I will have 100 different scenarios, term sheets on the streets, and probably 25% of them are by real estate agents brokering the loan on behalf of their client in the non-QM space. They're licensed real estate. It's not going to slow down. The hedge funds are way ahead of the banking industry. I actually ran into my former CEO at First Trust Bank at an event Thursday night. And I went up to him, hey, Tim, how are you? Nice to meet you. Nice to see you. And he's like, hey, Joe, how's everything going? It's going great. He goes, hey, what happened? Where are you? He goes, well, I said, well, we're not connected on LinkedIn. I don't know. You have a special code to get connected with you. But the best thing that ever happened was that Blackstone reached out to me while I was manager of sales at your office, because I really was a resi-commercial lending source, and it made complete sense in the non-QM. And now I run a platform. Now I offer white label to people to broker my money. I offer real estate agents to. He goes, wow. He goes, where is this all going? I said, right now, in this lending space, we're 25% of the overall mortgage industry, and I see that going almost half and half against home buyers by the end of next year. I don't see it ever slowing. He goes, yeah, we're repivoting our sales, our mortgage sales in the banking industry, because we're not a lot of people about home buying homes. It all depends. He goes, we're seeing 50 to 60% more investor inquiry. So we have to get heavier into the space and catch up with the non-QM lenders that I feel that are way ahead of what we're doing on the local regional level. And I agreed with him, and I said, listen, if there's anything I could do to assist you, by all means, let me know. I was part of the family for 8 years or 10 years at that point. And I said, I don't forget what you guys have done for me in a good way, and love to collaborate with you guys. And there's a lot of business out there. And, one thing I do notice in the Black and brown community right now, especially in Philadelphia, the Baltimores, all the urban setting cities, St. Louis, any of the markets I visit, there's such an emphasis in affordable housing, DSCR, fixed to rent, fixed to flip. There is some home buying affordability programs, but the emphasis is on the investors to create the momentum for the recovery of a lot of these cities, or the ongoing recovery, or the ongoing renaissance. A lot of these cities don't have a lot of markers to justify inbound inquiry. Like, like Philadelphia, they don't have the corporate America is not moving into Philadelphia. Corporate America is moving out. Same with Baltimore, same with St. Louis, same with Chicago. They're getting bad reputations. So they have to figure out a residential multifamily redevelopment. And the banks just don't have the foresight on leverage, pricing, longevity in the deal. They're only offering 5-year money where non-QM is offering 30-year money, 40-year money, 10-year interest only money. I don't see this slowing down. The momentum is right there. So like, if you don't take the bull by the horns and accept the fact that you need to be investor friendly in your platform, or at least be privy to what direct private lending is and how it collaborates with this agent investor strategy. I mean, we're a perfect connector and collaborator and the glue that keeps that collaboration flowing. And I can't emphasize that enough. Now, is my industry shape-shifting? Yeah, companies are going to come and go over the next 24 months. I'm going to tell you that for a fact. There's a lot of companies that are in bad shape because they did some bad underwriting, because they don't have the people that work for them and represent them had bad transactional experience. They just hired anybody that was willing to come on board. It doesn't work that way. Transactional experience means you've done or seen or been involved with 1,000 transactions. Okay, good and bad. Because then you have something to bounce off of when you have that new scenario presenting itself, right? I'm surrounded with somebody that's been in the industry 35 years. I've been in the industry 25 years. I see that individual as a mentor to me and a coach and a guidance. But then I also come back with things that he's not aware of or she's not aware of. It's a beautiful dynamic to work with transactionally experienced individuals. Now, I love the newer investors are pumped up. Oh, I want to do all these loans and boom, 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 boom. But they got to look at the bigger play. The bigger play is having deeper conversations with real estate professionals. Like, I'll give you one last example, and then we'll give our exit discussion. I had a realtor having a hard time with another realtor on a deal, and I called the selling agent. I knew her. I reintroduced myself to her. I said, "Listen, I want to take blame. There was a three-day delay because I just changed balance sheets, and I had to go radio silent for 3 days." Okay. I said, the appraisal is coming back on Monday. We're going to have an update. We had to restructure the LLC for the client, and we're going to close hopefully on time. But I will keep you abreast of what that looks like over the next 48 to 72 hours. And by the way, do you have any other deals like this that I could introduce to a couple of my buyers? She's like, that's kind of funny. I have another deal I'm trying to get a buyer for. I made 3 introductions to that selling agent on her other deal that she's trying to get rid of, to 3 qualified borrowers in that area, in that market. What did I had not the best information back from her. I took the blame of what happened to a point, but I also gave her potential future endeavor business. So sometimes you got a pile of crap. Make sure you got a big tablespoon of sugar at the same time where you're giving back a little sweetness. And when you're talking to real estate professionals, they do really appreciate that. Hopefully, not all the time. There's some craziness out there. But I think there's a huge opportunity in communication. I know we have PropTech. I know we have AI, but there's nothing wrong with that good old fashioned conversation with somebody. So I want to make a promise here, guys below. Reach out to the moderators. They've taken the time of giving their insight, their input. If you have a question how I can help you in your business, let's have a one-on-one. I'm going to be at the New York Real Estate Expo at noon discussing market trends, asset-based lending fundamentals, and my CE course. Tomorrow night, I'm in South Jersey. Wednesday, I'm in South Jersey. Thursday, I'm in Philadelphia. Friday, I'm in Connecticut. Saturday, I'm up in North Jersey. I'm here to hopefully be part of your fabric in your weekly discussions and weekly opportunities with clients. If I can make any proper instructions as well, you obviously have my contact information. You have hopefully all the moderators' contact information. I want to thank Linda Pelagas of Realty 411, providing yet another great interview with Fred Bin at Zoom Casa. I want to thank Mr. Earl Perkins of Perkatech, who provides all the social media platform for the podcast. He's a co-founder, friend, associate. We've been working together 10 years. We met at one of my networking breakfasts, and we have stayed close together in our association for 10 years at this point. We're celebrating our 150th episode. We're celebrating 10 years in the real estate mastermind strategies events throughout the North. Providing white label opportunities and referral programs for real estate professionals throughout the country. Finally, I want to thank MB Capital Solutions, where I'm a referral partner there with Eric Moss, who I've known 18 years, providing unsecured business lines of credit for clients every day. I just made 4 more introductions this morning. Some referral partners, some just people that need money to leverage against the unsecured business lines of credit for direct private lending and non-QM space. So we're here every Sunday morning, 9 a.m. Eastern Standard Time, providing education, networking, and strategy. We'll be ending the room in the next 30 seconds, but I want to give a quote that I always try to end up with a quote here. To all the doors that closed on me, I'm coming back to buy the building. Be blessed. Have a great Sunday. Hopefully Amy has a follow-up room as well. If not, we'll see you next week on Sunday morning, 9 a.m. Eastern Standard Time. Amy, you got one coming up?
Do have a follow-up room. Yes, and have a blessed Sunday, everyone. We'll see you in the next room.
I'm ending the room in the next 30 seconds, and thank you.